In this video, I'll go through some reasons that I do not invest for dividend income. To balance out my dislike for dividend income investing, I'll go through when it might make sense for you to pursue this investment income strategy. There's this trend that I've seen on YouTube and other places lately on the topic of investing for dividend income. Now, this is not a new concept, but it seems like more and more people are making videos on this topic. With platforms out there like Robinhood, M1 Finance, and Webull making investing easily available, it gets everyone's nipples hard because investing for dividend income is touted as one of the ultimate ways to earn passive income. It sounds easy, right? Just buy this stock and that stock and this stock and you'll receive a quarterly or even monthly dividend. Some of these companies have been paying out a dividend for like ever, so it's a guaranteed, consistent source of income. But let's stop for a minute to really think about this way of investing. The point of this video is to give you more information so you can understand if partaking in this strategy makes sense for you or not. Hey money nerds, I'm Jarrad with an A, and on this channel we talk about all things personal finance and investing. Just a disclaimer, nothing I say in this video should be taken as investment advice. This video is for informational purposes only, so please do your own research. When I talk about investing for dividends, I'm not talking about investing, for example, in an index fund like VTI with the goal of overall growth and receiving a dividend in the process. I'm talking about purchasing specific stocks with the goal of creating a monthly income stream through dividends that they offer, aka dividend income investing. Before we get too deep into it, I need to point this out so my words do not get twisted. I am not saying that receiving dividends aren't important to growing your overall portfolio, because they definitely are. My argument is against investing specifically for dividend income and why it doesn't make sense for me and also might not make sense for the vast majority of people that see these types of videos. One more disclaimer, because dividend investors take opposing views very personally and I've seen their feelings get hurt pretty easily. If you invest for dividend income and you love it so much, then that's great. Do I think it's a good strategy? Negative, but it is a strategy and it's better than not investing at all. If it keeps you excited about growing your money, then I cannot fault you for that. A partially flawed strategy that you stick to is better than the perfect strategy that you do not stick to. It's important to always be willing to change your mind though, because if you're not, then you close off all those other opposing views and end up hurting yourself because you stay in this safe space that you've created for yourself. If you have a different opinion than I do, then feel free to leave them in the comments down below. I am all about constructive conversation, even if they challenge what I think. Dividends are paid out by companies to shareholders when they have money left just sitting around that they don't plan on reinvesting back into the business. When a company has a large pile of cash like this, there's usually two ways that they'll return some of this capital to the shareholders. The first is through paying monthly, quarterly, or even sometimes yearly dividends. The second way is through buying back shares of their own stock. In 2019, Microsoft bought back $40 billion worth of shares. Apple repurchased $75 billion, and many other companies did the exact same thing. The fewer available shares to be traded, the more valuable the stock is, which means the price will usually increase. It is the basic principles of supply and demand. When a company pays out a dividend, the share price goes down by at least the same amount. If the share price is $200 and they pay out a $2 dividend, then the price will drop to $198 per share at some point, either after the dividend is announced or when it's actually paid out. The price drop might not be as obvious because the price per share will still fluctuate like it always does on a day-to-day basis. This is just common sense if you think about it. The company is worth less since money is leaving their bank account with zero chance of increasing its value. Think of it like the company is spending money that will not increase the value of the business. It's basically a sunk cost. If instead it decided to reinvest that money, it could be put towards something that has the potential to increase the overall value of that company. Dividends should not be looked at as free money, like some may want you to believe. It is just a way for a company to give its shareholders a little sliver of its profits in a certain way. I know this is difficult for some people to wrap their heads around, but receiving a dividend is the exact same thing as selling off shares of a company worth the exact same amount. If you haven't done it already, please Hulk smash that thumbs up button. When you get down to it, investing for dividend income is just a glorified way of stock picking that's wrapped up in the allure of earning passive income. That statement right there is going to trigger a lot of dividend investors. When you purchase shares of individual companies, you're putting quite a few of your eggs in one basket. Now, I know that naysayers will call out that they're investing in many different companies to help diversify themselves to protect them from the downside, but I'd argue that that doesn't matter. When someone is investing for dividend income, they're still trying to pick individual stocks that they think will perform well. Not sure if you knew this, but a very, very small percentage of people are good at picking stocks that will outperform a basic S&P 500 index. There's more than enough financial studies out there that prove this. Am I saying you can't pick really good stocks and come out ahead? Not at all, because there are people out there who do that. But what I am saying is, what makes you think that you are so special and gifted to where you'll be able to pick successful stocks better than some of the largest investment firms that have hundreds or even thousands of people working for them, and also have access to more data and information than you would even know what to do with? Think about it. If they have access to all of those resources at their fingertips and still can't outperform a standard index, then why do you think you're going to be able to do any better? Yes, they might be able to beat the market in the short term, but definitely not in the long term. The odds go down even more as we add additional years to the investing horizon. This makes investing for dividend income even less desirable because you probably plan to buy and hold these investments for long periods of time to collect your dividends. Now, I could honestly drop the mic with just this point as to why I don't invest for dividend income, because it's more than enough of a reason for me not to do it, but that wouldn't be any fun, so let's keep going. There are no guarantees that a company will pay out a dividend even if it has been in the past. I know you'll hear that you can limit your risk of this happening by investing in those large, stable, blue chip companies who have consistently paid out money every single quarter, but hold on for a minute. Let's assume that you do invest in a company that has been paying out a dividend every quarter over the past 30 plus years, like GE has been. Within the past 20 years, their dividend yield has been all over the place. Back in 2000, it was hovering around 1%, then slowly increased to 2%, 4%, 5%, 7%, and even 11% over the next 8 years until it dropped down to as low as 2.5% back in 2009. Then it stayed around a 3 to 4% dividend yield until 2019 when it hit as low as 0.35%. If you were someone who was relying on a portion of your dividend income to come from GE to live off of, then you'd be in for a pretty big surprise. General Electric is just one example of a company that has cut its dividends over time. There are many others who do the same every single year. And going back to the previous example, what makes you think that you'll be able to choose the stock of a company that won't cut their dividends? Sure, you might say, well, if their dividends start to go down too much, then I'll just sell my shares and buy something else. Okay, I hear you. So then how do you know when the right time to do that is? Which stock will you buy next? Because now we're back to trying to pick stocks and time the market, and humans are already really bad at both of those things. If you're interested in the possibility of successfully investing for dividend income, then you need to be willing to put a lot of time into it. Properly evaluating companies before purchasing their stock dividends is important. Yes, you could just go buy some of the more well-known equities and leave it at that, but I'm honestly not sure how good of an idea that is. The people who I've read up on that are all in with dividend investing admit that they enjoy the process of putting in hours of work to pick and maintain a portfolio just like this. Now keep in mind that there is zero correlation between the hours that you spend picking dividend stocks and an increase in your investment returns. Zero. I don't care how hard you work. There is zero correlation.
I'm just gonna work smart and not hard.
Okay, let's see how that works out for you. For passive investors, actively managing our investments is a nightmare. I would personally rather spend my time doing other things or investing my time and money into things that I have way more control over. I already have enough of my net worth worth invested in the stock market. If I'm going to spend any more time and money to grow my income streams, then I prefer to do it through things that aren't associated with the stock market, like building businesses and investing in physical real estate. The next reason that I don't do any dividend income investing is because my taxable income exceeds $39,375 per year, which means that I'll pay 15 to 20% capital gains tax on my qualified dividend distribution. Yes, even when you reinvest those dividends, you'll pay taxes because you're technically still receiving a type of cash payout. I know that a lot of these dividend investors who show you their portfolio on Robinhood are for sure investing within a taxable account because Robinhood doesn't even offer a traditional or Roth IRA. Dividend income investing could be tax efficient if you did it within a tax-deferred investment account like an IRA, but that would defeat the whole purpose and the whole point of investing for dividend income right now, since you shouldn't be using your IRA money until you retire, especially if you are someone who is young and doesn't need to pull money from the account for many years down the road. For people younger than 55, retirement accounts usually aren't needed for many years, so it doesn't make sense to be investing for a current income stream within that account, especially if you haven't reached the age to start using that money. I'll talk more about investing for dividend income within a retirement account in just a few minutes. When you're a young investor, you're in the wealth accumulation phase of the process, not the wealth preservation or spending phase. So why would I be trying to earn a monthly income from my investments right now? It doesn't make sense to try to earn dividend income when you're young within a taxable account only to pay taxes on those earnings. Those tax dollars you're paying could be earning you more money if they were being invested as opposed to being paid to the government. You're creating a tax drag on your overall wealth and net worth, which will leave you with less money in the long run. Another reason I don't invest strictly for dividend income is that you're forced to take the payout no matter what. This leaves you with a tax burden when you might not actually want it. You're better off investing for growth and selling shares when you want to receive some cash from your investments. Doing this is the exact same thing as getting paid out a dividend, except for the fact that you actually get to choose how much you want, as opposed to being forced to take out whatever the dividend is offering at that point in time. I'd rather invest in a mixture of companies that do and do not pay out a dividend to help diversify my overall portfolio. Once a company starts to pay out dividends, it's really difficult for them to stop doing it in the future because investors get really greedy and they expect it all the time. Just like my grandpa told me one time when I was younger, you can't unpoop your pants, so be very careful before you leave the house. Because of this mindset, a dividend might be paid out to the detriment of the company and the employees who work there. Just to continue paying a dividend, some corporations might have to lay off employees or even take on debt just to continue the streak of paying out a dividend. Businesses change, industries change, laws change, new competitors enter the market, and many different factors might go into why a CEO would choose to stop paying a dividend. But instead of cutting out a dividend so that they can readjust the business to make sure that they can still stay in business, they continue to pay out that dividend because some investors have come to expect it regularly. I'd rather invest my money in a company that's focused on overall long-term growth as opposed to making short-term decisions that could put them out of business just to make sure that they pay me out my poor little dividend. Let's finish this video with some final thoughts. Once again, none of this is financial advice. This video is for informational and entertainment purposes only. Please do your own research. If someone is super interested in investing for dividend income, then it would probably make more sense to do it within a retirement account like a Roth IRA. That way you're not paying taxes on that distribution. Although I still don't think that it makes sense, it makes more sense than using this investment strategy within a taxable account. Once again, I wouldn't be interested in banking my future retirement money on picking single stocks. If you've really got a hard-on for investing for dividend income, then at least think about waiting until you are in the wealth preservation or spending stage of life, and definitely talk to a professional before doing this. Just a quick warning, everyone thinks that they're a hotshot investor right now because the stock market has had an insane run over the past 10 or 11 years. It seems like a lot of people are getting a little too cocky with their investing because of this. I am at the perfect age to where I remember the US economy crashing back in 2008 and 2009. Now, I didn't lose a bunch of money because I was young and didn't have that much to lose, but I still saw what it did to people. Be aware that there will be another market correction at some point in the future. Now, I don't know when it will be or how bad it'll be either, but just be ready for dividends to potentially be cut if and when that happens. If you are still enamored with the thought of investing for dividend income now, then at least make sure you're properly diversified and don't do it with a large portion of your total amount invested. I'll throw a link to a really good video in the description on why dividends do not matter coming from a real life wealth manager. Watch more of my investing videos right here to your left. I'm editing the video you're watching right now, and one of these videos right to your left is from my buddy Dennis, who actually is a dividend investor. He will tell you why he invests for dividend income, so go check it out. Make sure to check out the description for different playlists and resources to help you out with all of your personal finance and investing needs.